Good afternoon. I'm Joe Dworsky, and welcome to this week's Freedom to Buy podcast. Presented each week by SuperNet, which is the only payment network that enables credit card payments for cannabis merchants and consumers. Each week, our podcast will take you behind the scenes of banking, finance, payments, and technology to help educate our audience on how to make the most of your purchasing power in the world of credit. Today's guest is a CPA with over 14 years of professional experience across multiple industries, ranging from real estate, healthcare, fintech, cannabis, crypto, and tech startups. In addition, Zach was an honoree on the 40 Under 40 list, I think back in 2021. Please welcome to the show, Zach Gordon. Zach.
Hey, Joe. Thank you so much for having me.
It's our pleasure, and I hope I got everything right in the intro.
Only thing I would say is I still have a couple of years on the 40 Under 40 left. So I did nail 22.
Okay, good. I'm glad. That's great. Well, once again, it's great to have you on today's show and to get a chance to learn more about what you're doing across the board in the world of accounting and the areas that we discussed. Let's just take a step back. I gave a little snippet about your background, but for our audience, can you talk a little bit about, how you got into the world of accounting, what attracted you to it, and then how you made a switch, I understand, as well, to the other side, if you will.
So it's been an interesting journey, and I've had what you would call a non-traditional CPA career, but started off very traditionally. Went to school, went to Binghamton, a great accounting school. So finished there, started off at a mid-sized accounting firm called Marks Paneth at the time, CBIZ these days, and went down the usual path, got my license, saw tax audit advisory, so I got to see the whole bigger picture and got to the point where basically stay for forever, stay for life, or make the jump to, as you sort of alluded to, the other side of the table. And that being from, as a CPA, looking at the client life. So being in private industry. And I made the jump to private equity and started off doing some controller work and wound up doing a bit more on the deal structuring on some of the more hefty work, getting involved with deals and just structuring a lot more fun. And in that time, I got much more involved in the tech space and wound up actually with a tech startup. And we were able to raise some money and started doing that full time. So being able to build a company from the ground up. And that was such an awesome experience, and obviously a couple of challenges along the way.
Okay, great. So your accounting degrees gave you an entree into the private equity world where you were able to then transition to actually the structuring side as well as the fundraising side and running a company, it sounds like.
Exactly right. So basically, accounting's, it's what you make of it. I think there's a lot of stereotypes about accounting being really boring and, you're sitting in a back room with an adding machine, with the green visor and all that, but that's honestly not the reality. I mean, even regardless of where you are in the accounting industry, it's what you make of it. And I think it can be very exciting if you find that part of the industry that you're passionate about. And I've been pretty fortunate to find a couple areas that just work for me.
Right. Well, listen, two things. I would imagine that if you're in the world of accounting, you enjoy numbers, working with numbers. But in addition, financials are critical to the success of any company. Okay. So the controller, the accountant, within that company, even if it's in the private equity world, and someone who can crunch the numbers is critical. Okay. So I wouldn't say boring. I understand the moniker that's out there, but I see it as a critical component to the success in any company, any industry. So, that's the way that I think hopefully most people see it as well. But that being said, so you made the transition, and I see that obviously you worked in many sectors within the private equity arena, whether it's crypto, cannabis, real estate, healthcare. Is there anyone that you're you're focused on today? Are you focused strictly on cannabis, or is it still agnostic across the board in different industries?
I certainly like to get my hands dirty in a few different areas, but if we can call it a day to day, it's mainly crypto and cannabis, splitting time there. And it's just funny because usually, again, going back to stereotypes, accountants, CPAs were a little risk averse. I think I've run in the exact opposite direction from a niche perspective. I don't know if they get any more risky than crypto or cannabis, but honestly, it's one of those things I sort of got into it by accident or by circumstance, let's say, probably a better word. And it's been an awesome ride ever since.
Can you expand how you by circumstance or by accident got involved in the industry and that you now love?
Of course. So during my time in startup land, I was in WeWork, and quite a few are. And coincidentally, in the office next to mine was a retired Wall Street professional who was deploying capital into the space. And so we hit it off, and it just sort of went from there. I think we had some complementary pieces where he had access to capital, he had access to deals. And from a more financial perspective, I was able to come in and try to help with the due diligence, we talk about the numbers being important, try to read what story the financials told. And that's really key if you're doing any sort of due diligence, if you're trying to set up any sort of infrastructure or a greater business at scale. Those numbers tell you everything you need to know. And that's how I really got my first foray. This is back in 2016. So if you're thinking about crypto and cannabis at that time, it is an even more gray landscape than it is now. And it afforded me the opportunity to speak to representatives from the AICPA, the New York State Society of CPAs, so the governing bodies as a CPA, and reach out to local politicians, or basically anyone I could think of, one, from a perspective of, frankly, self-preservation. Am I going to get myself into trouble here by working in these industries? And two, being a more typical accountant from this mindset, but what sort of guidance is available? Who's done this before? What sort of authorities have laid out the proper path from a compliance perspective? And at that point, it didn't really exist. So I was able to work with the New York State Society of CPAs to set up one of the first cannabis industry committees. So we were able to bring together different CPAs, lawyers, finance professionals, business owners, and operators to come up with one place where we could either share ideas, share experiences, or help to frame what that next step of the industry looked like.
Okay, that's
been in it ever since.
No, that's fascinating. I mean, so obviously you're entrenched, if you will, which is a good thing in a good way in the cannabis industry, and obviously timing couldn't be better given the recent, passage of cannabis use, if you will, in the state of New York. So that obviously timing has worked well. I mean, you've been involved. Obviously, you set up these committees back in 2016. So I guess everything that you see coming to fruition now, I guess the New York State Society of CPAs, obviously, and the American Institute of CPAs have seen a lot more activity in the cannabis space. What can you share with us on those two organizations? I mean, with the passage of the legislation in the state of New York, I would imagine, you're seeing a lot of activity with all the dispensaries that are opening up across the state. And how are you involved with that? Are you more involved strictly, from a capital fundraising perspective, structuring perspective? Or are you still utilizing your CPA cap in that with these new regulations and laws being passed?
Oh, the CPA cap never comes off. Let's be honest. Once you get those magical 3 letters, they stick with you for life. But I've had the benefit of being able to work across a multitude of different states before New York passed. So being able to see some of the good, the bad, the ugly, national level, it brings perspective. And especially with New York, New Jersey, Connecticut, Massachusetts, et cetera, sort of not coming online at exactly the same time, but moving as a broader region, it did help with a certain perspective. So to answer your question, yeah, I've been involved deeply as a CPA, as an advisor, as far back as taking a first look at the MRTA and the CRTA, which sort of, the predecessors to what we have today, coming up with not only a more practical explanation and model, a financial model for what the tax and the tax implications, what the true economics are, a state with the economic scale of New York would look like. Just trying to, again, be able to translate that so that someone who's maybe not an experienced operator from a business perspective, or maybe has had success in other industries and that's trying to make the jump to cannabis, make it easy enough to digest, because we are dealing with some pretty significant compliance and tax challenges here.
So are you dealing with the actual dispensary, the MSO? You're dealing with, those are your clients, correct?
Dispensaries, cultivators, manufacturers, basically up and down the vertical, as well as ancillary. So basically, first, determining if, from a tax perspective, if 280E is applicable. And just really, really quick, 280E, basically it states that if you are in a plant touching business, if you are trafficking as a more technical term, and again, a bit of a gray area as well, then you are not allowed to deduct for tax purposes your operating expenses, which becomes a really, really sticky point. And it leads to some huge tax bills. It makes cash management incredibly important. And just the strategy is as essential as it is in any other industry, but it's just highlighted a bit more here just because of those extra issues.
Interesting. So obviously anybody who's plant touching, that's the problem with the 280E. That's where it applies. So it's not. So expand on that a little bit further, for our listeners. I'm thinking about this as you say it. So that's a big issue. So how do you work with, the clients, if you will, to, address the 280E statute?
Yeah, well, great question. And the answer, like all great accounting questions, it depends. And really, it starts with documentation. And what I mean by that is coming up with what your policies and procedures are and what you can allocate to cost of goods sold, which is allowed because it's not a deduction. It's technically a reduction in revenue. So you have your gross revenue. So let's just say your dispensary, you sell product. That's easy enough. That's top line. But then defining what is your cost of goods sold? What can you directly allocate to that sale? And if you're a dispensary, really, as of this moment in time, the acceptable answer there for the most part is inventory. Yeah, which again is still a bit of a discussion as well. But if you're in other parts of the cannabis vertical, so if you're a cultivator, if you're a manufacturer, processor, then you have some opportunities to allocate some additional costs. So whether that's from square footage, so if there's a lease, then there's some potential costs that can be allocated. Some of the ancillary expenditures that we would be comfortable with allocating there, put that into writing and come up with that process. And processes will always be updated and changed, but just make sure that you have the proper documentation there so that we can tell that financial story again. So if any sort of authority, whether it's the IRS, whether it's the state, whether it's any investors, anyone else wants to come and take a look at how you got to the numbers that you're presenting on your financial statements, we already know how we got there. And we already have the proverbial stack of papers that you can plop that on the table. Yeah, proverbially, that's, we're digital age here, but you know what I mean?
Exactly, right.
And so that allows you to have everything clearly defined. And that's so incredibly important.
Now, let me understand one thing. Obviously, you're in New York. You're a member of the, New York State Society of CPAs that we discussed. But you said earlier that prior to legislation, for the approval of cannabis in the state of New York, you were working outside the state with other clients, and I imagine you still do. Was that New York, New Jersey? Where else across the country, were you working with clients that helped you, understand the hurdles and the roadblocks, that you're going to have to overcome, and that you did overcome, that you can bring back to the state of New York?
Yeah. So for the longest time, California and Colorado were benchmarks. I mean, they were the first markets that really got this cannabis industry going at scale, and slightly different journeys for each of those markets. And you can certainly put the Pacific Northwest up there as well. But they give a good baseline. So having clients there, and again, running the gamut, dispensaries through cultivators, et cetera, having some unique experiences along the way. For example, it's not every day you get to walk into a privately owned bank vault that is stacked floor to ceiling with cash. And that's one of those unique experiences that sort of follows you a little bit. But it's experiences like that really, really prepare myself and many of the other professionals I've worked with for a state like New York. Not just that it's our home state, but it's also an economic superpower. Being able to learn from the good and the bad, the ugly, as I said before, really, really comes a long way to helping to make this as efficient as possible from a New York perspective.
Right. Well, I mean, and you give a perfect, example of why we're doing at SuperNet. Because when you walked into that vault just with all that cash, I'm sure that's a nice experience. Obviously the roadblock has been in banking, even though you have over 500 banks that are banking cannabis. But once again, it's still all cash. Okay, because you have PIN debit, which is available. There was cashless ATMs, which is being shut down, but there is no true credit card solution for the cannabis industry. I can go across the street, get a slice of pizza charged. I can go to Costco, charge it. I can go all around town using my credit card, but I can't go to the local dispensary and use a credit card. Okay, and that still presents a problem. And that's why at SuperNet, we're building the rails, if you will, the network where cannabis dispensaries, MSOs, all touching businesses, can utilize true credit, to help them run their businesses more efficiently, as you stated, from the accounting perspective, trying to make it run more efficiently. So this is very interesting and very informative and timely. But let me just segue to my next question. You've had experience, obviously, in other areas that you mentioned. When you made the shift to private equity, you started getting involved with the deal making, the fundraising, the access to capital. Obviously, we're running, operating in a very challenging time, to say the least, with what's been going on in the economy and rising rates over the last year and a half. How are you seeing that impact these cannabis businesses in terms of raising capital and access to capital, if you will?
That's an amazing question, and one that I think we could probably take another hour to go through, if we're being honest here. But it is a major challenge right now to raise capital. It's not just from the broader economic forces, but also from a compliance perspective. There are, especially if we're just talking New York at the moment, there are rules about where you can get your capital from, certain disclosures that have to be met. And it's created this really narrow field of opportunity. We know at the broadest levels that institutional investment just really isn't there. There's certainly a cannabis premium on any financial products that are available. So you mentioned high rates. That's been a reality for the cannabis industry since the beginning. I mean, it used to be a certain point where, if you were in the teens from an interest rate perspective, you were certainly not happy, but that was something that you could stomach. And that creates an overhead problem, in addition to the tax issues and everything else that comes with being in this industry. So there's no question that if it was a challenge before, it's an even greater challenge now, especially if you're operating in a state like New York that not only is complex from a compliance perspective, but just adds a little extra flavor with everything being even more expensive to operate in than other states.
Are you equally involved in that side of the business still, in terms of the structuring, the fundraising, or
it's all part of it? So, if not only having a CPA hat on, but having a CFO hat on. Quite the dance, honestly, to get the structure right while also being compliant. And there's been a few structures out there that have been floated in the past and for some reason are coming back in vogue. I think we've seen some of the management company models that, to be very frank, I would not touch at all. They sound great on paper. However, what IRS, what other authorities will do is they will just collapse the structure, and then you'll get hit with penalties, fines, and all the rest that come with that, because there is no getting around 280E. There is no getting around paying tax.
Can you talk about these structures that you mentioned, these management structures that you've seen out there?
And all the disclaimers, not any official advice here or anything like that, but just speaking in the hypothetical, of course, specific parties involved. But if you have a cannabis operator and you want to come up with something that is, you're going to try to minimize the tax hit that 280E can apply. There's, theoretical structures out there where you create a separate entity that is the quote unquote management company. So that's where employees are housed. That's where contracts live. That's where your utilities are paid from, et cetera, et cetera. So basically all the operations are handled by this other entity, and all you have going into the cannabis company itself are the sales and basically holding the license. And so the prevailing theory is that, it's not touching the plant. You're not selling anything. It's just running at a loss, or maybe with a small markup, something like that. Just no, please don't do that.
Gotcha.
I bet that, of course.
Right, but I imagine
comes from the IRS coming in and then seeing, we're not dummies here. We know that that's exactly what you did. We're going to collapse this entity. We're going to calculate what the real tax due is, and then you're going to be paying percent on top of percent on top of percent to make it right.
That being said, it brings me to my next question that kind of just popped in, because I remember having a conversation with a colleague about this. My understanding, and correct me if I'm wrong, and educate our audience, that different states have different tax rates. I mean, the tax rates, obviously, every state has their own tax rates on different products, but on cannabis, I think that there's a big spread between what a state like California is charging versus who they were the first one into the marketplace, and they're saturated now, whereas New York is new to the game. Can you talk a little bit about the differences and the spreads, if you will, and different tax rates across the country in different states, if you will?
Of course, and it's such a bigger issue than just the rates themselves, but it's the structures. So you've got certain states where not only will there'll be sales tax at the retail level, the dispensaries, but there will also be excise taxes. There'll be certain transaction taxes. There will be THC content taxes. I think, at a certain point, you start running out of terms to describe all these different taxes at different levels. So it can become very punitive. And where this becomes an even bigger issue is that having the cost of the end consumer being even remotely competitive from an economic perspective with the illicit market. So think about this logically in super simple sample. You have a gram of cannabis costs $1 at the cultivator level. Costs the cultivator $1 to create that gram, get it ready to ship. So that $1 then goes to the processor to be turned into XYZ. There's a certain markup there involved because everybody's going to make something along the way. Well, if you have an excise tax or if you have any sort of THC content tax, whatever it might be at that mid-tier level, that's getting built in and then passed along to the next. So you keep adding costs on top at every layer of the vertical. At the end point, it's the consumer who's going to pay for that. And so, that $1 now is $11.27.
Wow.
Whereas if you just go to the illicit market, it is not $11. It is
right. But so let me ask you,
significantly less.
Right. So what would that be? But different states, that dollar in different states, one state might be, all in 11. I guess other states might be 7. I would imagine different states based on the maturity of that market. Is that fair to say?
If only we're that linear, but actually it's even deeper than that because it does this. It depends on, sometimes it's the legislation that defines, some of these quirky structures. Sometimes it's the market themselves. You're right, but there's much more to it than that. And if only we're that simple.
Right. But I guess
that's why, for good reason, there will almost certainly be this sort of protective nature around these solo markets, how they're set up right now. Because if you look at pretty much any other industry outside of certain, small batch, certain, local focused products, you're going to manufacture where it's the cheapest and then ship it to where consumers are.
Mm-hmm.
And given that you can't cross state lines for cannabis, that's not happening anytime soon.
Right. But even though it's costing more in many of these, jurisdictions,
mm-hmm.
whether it's recreational or medicinal, I mean, a state like Colorado where, you have the recreational laws, I would imagine the consumer is still walking into the, dispensary to buy it through the dispensary versus, the illicit market. So even with the higher markups, people still want to go into their local dispensary and purchase it. Do you see any hindrance to sales in these different jurisdictions because of the different taxes that that we discussed?
Without a doubt. You take a look at California, the illicit market there arguably has never been more powerful.
Really?
Oh yeah. And it's one of those things.
So it's impacting.
For sure.
The legal market is what you're saying.
Oh, without a doubt. And I think most consumers will pay up to a point to have some quality assurance, to know that they're working on the legal side of the market, as it were, that there's all these different controls in place, etc. However, everybody's got a line. And I think what you saw happen in California in particular is just tax after tax. The system was pushed to that line and then passed. And there's just this big reaction. And it's something that they're still trying to figure out. So from that end, a lot of states, a lot of markets have to be very wary of that. And that's something that I hope in New York we're being very cognizant of as well.
Mm-hmm. Well, do you see a difference? I don't want to make this political at all, but do you see a difference in, blue states versus red states where you have cannabis legislation in terms of the tax structure?
I don't think I honestly don't even think it's easy enough to break it down just by red state versus blue state.
Mm-hmm.
But I think it goes much deeper than that. I think it does go down to the individual legislation and how simple, it's probably not the right word, but how complex is probably the better way to look at this. That legislation is, how complex the program, the cannabis program itself is to operate in. Mm-hmm. And that's the bigger driver. So if you have a lot of red tape, if you have a lot of steps, a lot of barriers, then it's easier for the consumer to justify, I'm not going to put up with this, so I'll just stick with, whatever my means of acquiring said products are now, I'm going to stick with that.
Right.
I don't want to pay the higher cost, or after a certain point of novelty wears off, I'm good. I'll stick with what works. I'll save the money.
Okay. So hopefully, these barriers will slowly come down. I mean, obviously, the revenue's there for these states. The question is, does the revenue continue to grow, or do these taxes, slow that down where it benefits the illicit market, as you indicated in California? So those are issues that will have to be addressed as the industry continues to mature and more states, legalize cannabis, and eventually on a federal level. Do you have any thoughts on the federal, legalization of, when that might be, or based on your experience?
Oh goodness! The one thing I just want to add first from our the prior line there, It's just the balancing of social equity on top of the needs from an economic perspective.
Mm-hmm.
So just trying to meet in the middle there is a really, really, it's as difficult as it gets. So trying to balance out, every state has a tax bill to pay. Every state wants to maximize their tax revenue, I should say. And this is a great means to do that. However, some of the inspiration for these programs is also to ensure that communities that have been significantly affected by the war on drugs are also empowered. So just getting that middle ground is a really, really fine line to walk. And it seems like certain states are trying to get there. And I think at its heart, New York has that in mind. It's just a matter of execution. So again, finding that balance and getting that execution is going to be key. Now, if we're talking federal legalization, that's a very broad term, and it's something that's sort of an interesting topic. And what I mean by that is that the topic of descheduling has come up quite a bit with the Biden administration, and it's something that they said they would visit. Now, there are absolutely no specifics given, and there's been an occasional we'll take a look at this at the end of the quarter, and the next session, and the next year, etc. But if they can actually follow through on that during his term, that becomes a unique opportunity for the greater market. Now, just to key everyone in terminology. So currently, cannabis is a Schedule I drug. So it is listed at the same level as other illicit drugs, the cocaines of the world. And what that means is that there's no medical benefit there. Basically, you can't go anywhere near it for all intents and purposes. Financial, any sort of economic perspective, no go. What has been proposed is moving it from Schedule I down. So 2, 3, 4, 5, or completely off that schedule altogether. Now, that gets us to the point of the devil we know versus the devil we don't know. Some pretty logical follow-up questions are, who would be the logical authority for cannabis as a national market? Great question. Again, that's another hour on top of the hour that we talked about before.
Yeah. It is. And it's all fascinating. It's all interesting. It's fast moving, the industry. I'm sure eventually, you're going to have, legalization, on a federal level. But it's a matter of, when. Is it a year, 2 years, 3 years? Is it going to be this year? Nobody seems to really know. But that will not slow down the continuation of this being approved on a state-by-state basis, being put on the ballot. I think this has really been very eye-opening and informative, Zach. I really appreciate your time today to learn about what you're doing within this space, your background and how it's expanded and how it's continuing to grow within the cannabis industry. And I really appreciate the time that you gave us today to talk to our listeners. If anybody, wants to reach out to you, who's ever listening to our show today, whether it's, MSOs, dispensaries or so forth, how can people find you and be in contact with you?
Yeah, of course. Everyone's always free to shoot me an email. Z as in Zach, GORDON at propellerindustries.com. Propeller is that's our CFO firm. We've been around for about 15 years. We serve a multitude of different industries. So we're always happy to talk. And you can find me individually, Zach Gordon CPA on social.
Okay, great. Terrific. Thanks for listening to today's Freedom to Buy podcast presented by SuperNet. You can learn more about our payment network by visiting our website at supernet.ai. You can also listen to past episodes and today's episode on cannabisradio.com, as well as Apple Podcasts, Amazon Music, Spotify, and Google Podcasts. Please join us next week on our next show of Freedom to Buy. Thanks, everybody. Have a good afternoon.
The opinions expressed on this CannabisRadio.com program are those of the guests and hosts and do not necessarily reflect those of the staff and management of CannabisRadio.com. Any rebroadcast, republication, or retransmission of this program without proper consent is prohibited.